Okay, so you've pulled together some really interesting sources on the Magnificent Seven stocks. We're talking Tesla, Nvidia, Apple, Alphabet, Microsoft, Amazon, and Meta.
That's right.
And it really looks like we're diving into a period of, well, significant technical shifts for these big market leaders.
Yeah, it does. The sources are definitely highlighting some recent bearish signals pretty much across the board.
And it goes beyond just that general market death cross we've seen in the S&P 500 and the NASDAQ, right?
Exactly. It's quite striking, actually, seeing this many influential companies showing similar sort of bearish patterns almost simultaneously. This concentration of signals, within this specific group, it could suggest maybe a broader shift in investor confidence or perhaps some sector rotation happening, not just individual stock issues.
Right, exactly. And our goal here really is to unpack what these technical signals actually mean, identify the key concerns people are raising,
and give a clearer picture.
Give you a clearer picture of what might be happening with these really influential stocks, but without getting totally bogged down in jargon.
Keep it understandable.
Yeah. You're looking for those important nuggets, those aha moments, and, well, we're going to try and cut through the noise to get you there.
Sounds good.
Okay, let's unpack this then. Starting with Tesla. Your sources point out its charts have, plunged into deeply oversold territory recently. The 14-day RSI hitting levels last seen during, market crashes. That sounds pretty dramatic.
It really is. An RSI down in the 20s for a company like Tesla, that's definitely noteworthy.
So panic selling, maybe?
Well, while an extreme level like that often suggests, potential for a bounce back, it's also important to remember that really strong downtrends can keep a stock oversold for, quite a while.
Okay.
The key will be looking for actual catalysts that could shift that momentum.
And beyond this sort of technical pressure, your sources also flag some fundamental issues for Tesla, don't they?
They do.
Q1 deliveries. A sharp 13% year-over-year drop. That's the biggest in almost 3 years, apparently.
Yeah, and that shrinking runway for a rebound, as they put it, is definitely something analysts are watching very closely.
So connecting that to the bigger picture.
Well, these delivery numbers, they raise questions, don't they, about the balance of supply and demand for Tesla's cars and how well they're navigating the whole competitive EV landscape.
Right.
That fundamental pressure likely feeds into why it's staying oversold.
But despite these near-term worries, the average analyst price target still suggests, a 30% upside over the next month or two?
It does, which is interesting. However, it is worth noting that the full-year EPS forecasts, looking out to 2025, have been cut quite significantly, which reflects a much more cautious medium-term outlook.
So maybe a short-term bounce is possible just because it's so beaten down, but longer-term fundamental worries are creeping in.
That seems to be the tension, yes. Analysts might be banking on a technical correction from these really depressed levels, but those revised earnings expectations, they show a recognition of headwinds that could limit, more sustained gains.
Okay. And briefly, earnings are coming up soon, right? Around April 22nd.
Correct.
And analysts expect a decline, both EPS and revenue, likely hit by that delivery slump and, all the talk about EV competition and maybe consumer sentiment shifting a bit.
Absolutely. Those earnings are going to provide some really critical data points. They'll either, validate these bearish technical signals with weaker fundamentals or maybe act as a catalyst for a turnaround if there's a positive surprise.
Definitely to watch. Okay, moving on to Nvidia. A big factor here seems to be the renewed U.S. export restrictions on its H20 AI chips.
Yes, that's been significant news.
Analysts estimate this could cost them, $5.5 billion in revenue in the second half of the year. That's huge.
It is a substantial figure, and that news has definitely put pressure on the stock.
It just underscores how vulnerable even these massive tech companies are to, geopolitics.
It's fascinating, isn't it, how quickly market sentiment reacts to regulatory news like that, especially for companies so deep into cutting-edge tech and relying on specific global markets.
Yeah.
That potential revenue loss, it's significant enough to make analysts seriously reassess the near-term growth path.
And technically, Nvidia's share price has fallen below some important support levels.
Yeah.
Around 100 and 105 levels.
Yes, and its RSI has also dropped sharply into oversold territory, similar to Tesla in that respect.
So that just reinforces the selling pressure.
It does, though some technicians suggest this could eventually lead to a, quote, relief bounce, maybe after a more significant washout.
A washout, meaning even more selling first.
Potentially, yes. The breach of those support levels confirms the strength of the downward move. The oversold RSI hints the selling might be stretched right now, short term, increasing the chance of maybe a short covering rally.
But despite these near-term technical headwinds, analyst sentiment on NVIDIA seems to still be really strong, mostly buy ratings.
Overwhelmingly strong, yes. The vast majority rate at a buy, and the consensus price target indicates around, 34% upside potential?
Wow. But there are worries about margins if these export restrictions stick around, even if revenue in other areas stays strong.
Exactly. So the long-term AI story, for many, is still intact. But there's this significant near-term hurdle and, a potential hit to profitability.
It raises that crucial question, doesn't it? How much future AI growth is already baked into NVIDIA's price, and how much will these restrictions actually slow them down in key markets?
That's the multi-billion-dollar question, isn't it? The continued analyst bullishness suggests they still see a strong path forward, but those margin concerns, they're valid and definitely need watching.
And it's also important to note NVIDIA's 50-day moving average crossed below its 200-day back in March, confirming a death cross.
Yes, another classic bearish signal.
So now we have Tesla and NVIDIA both showing that potentially worrying pattern.
Indeed. The death cross, where that shorter-term 50-day average dips below the longer-term 200-day, it's widely watched.
Right.
It basically suggests short-term downward momentum is outweighing the longer-term uptrend, often leads to more bearish sentiment.
And the emergence of this, even though it's a lagging indicator.
Right. It's often seen as confirmation that a shift from an uptrend to a downtrend has probably happened. Seeing it in both these market giants adds to the, cautious outlook overall.
Okay, let's turn to Apple then. It's also entered oversold territory. First time since late 2023.
Yes, it has. Which, sometimes can signal a turning point if retail traders are capitulating, giving up.
And on the price chart, a big development is the breakdown from a head and shoulders pattern.
Yeah.
That's generally bearish, right?
It is generally considered bearish, yes. Think of it like the stock tries to make 3 peaks. The middle one, the head, is highest. When the price breaks below the neckline support level after that third lower peak, it suggests the upward attempt failed. The stock might be heading lower, like a ball rolling downhill, as you said.
Gotcha. So that breakdown is notable.
It implies a failure to consolidate gains and suggests potential for more downside based on the pattern's measured move implications. And the oversold RSI just adds another layer to that concerning picture.
And maybe even more significant, Apple closed decisively below its 200-week moving average.
Yes.
That sounds like a really critical long-term level to break.
It absolutely is. The 200-week moving average is a key metric. Long-term investors watch it closely.
Why is it so important?
Well, a break below can often signal a fundamental reassessment of the company's long-term growth story, or maybe just its standing within the broader market by those big institutional players.
Interesting, though, KeyBank recently upgraded Apple, citing U.S. tech tariff exemptions.
Yeah, but at the same time, other analysts have trimmed sales forecasts. They remain cautious about iPhone demand, especially in China near term.
So conflicting signals even among the analysts for Apple.
It really underscores the complexity of Apple's situation right now. Positive news like tariff exemptions might help, sure, but those persistent worries about core drivers like iPhone sales, particularly in a crucial market like China, can still weigh the stock down.
Yet despite these mixed views, the majority of analysts still rate Apple a buy or strong buy. Average price target suggesting, 25% upside?
That's right. Some clearly view this pullback as a potential buying opportunity.
So, similar story again. Long-term belief persists for many, despite the recent technical weakness.
It seems so. The consensus indicates confidence in Apple's underlying strengths, the brand, the ecosystem. They potentially see this as a temporary dip.
Why?
But those significant technical breakdowns we just talked about, they definitely warrant some caution.
And, like NVIDIA, Apple also formed a death cross in April, 50-day below the 200-day.
Correct.
So now we're up to 3 of the Magnificent 7 showing this pattern. It's really becoming a theme here.
The increasing number of death crosses among these really influential companies definitely strengthens the case for a potential broader technical shift happening within the market's leadership.
Okay, let's move to Alphabet, Google's parent. It's underperformed the market recently, trading below both its 50-day and 200-day moving averages. And while maybe it hasn't triggered all the same explicit oversold headlines as the others, That still points to an intermediate-term downtrend, doesn't it?
Oh, absolutely. Trading below both those key moving averages is generally seen as bearish by technical analysts. It suggests the stock's momentum is currently skewed down, short and medium term.
However, your more detailed source does note that Alphabet's RSI did fall to its weakest level since September 2024. So it did signal oversold.
Right, and additionally, the stock broke down from an ascending channel pattern.
What does that mean?
Well, breaking down from a rising channel suggests that the previous upward trend lost its steam, basically. A reversal might be underway.
So maybe flying under the radar a bit in the big headlines, but the underlying technicals for Alphabet are showing weakness too.
Definitely signs of weakening, yes. The channel breakdown is significant, and while an oversold RSI could lead to a temporary bounce, you have to see it in the context of this potential bigger trend reversal.
Okay. Looking ahead, earnings are around April 24th for Alphabet. Analysts are forecasting strong growth, though. Revenue and EPS, driven by AI in search and YouTube.
That's the forecast, yes. Continued strength expected there. And the majority of analysts rate Alphabet a buy, expressing confidence in its, well, underlying resilience.
So again, strong future growth expected, similar to the others.
Right. The expectation of really robust earnings, especially fueled by AI progress, could be a strong counter-argument to these bearish technicals we're seeing.
How the market reacts to those earnings will be key then.
Absolutely critical. Will the fundamentals outweigh the technical pressures? We'll see.
And specific analysts, like at Citi and Morgan Stanley, have price targets suggesting up to 29% upside, based on YouTube monetization, search AI upgrades.
Yes, and they also express confidence in the cloud and AI segments driving medium-term growth.
So that long-term AI story seems to be underpinning a lot of the optimism here too.
It really is. The widespread belief in AI's transformative potential across Alphabet's core businesses is a huge factor supporting that positive analyst view.
Wow.
But the actual realization and market impact of these advances, plus any potential hurdles or delays, those remain key uncertainties for investors.
And guess what? Alphabet also joined the club, formed a death cross in April.
Okay.
So that's Tesla, Nvidia, Apple, and Alphabet now. 4 of the 7 showing this bearish pattern. That's quite a cluster.
It really is. The fact that a majority of this highly watched group has now triggered that death cross formation, that's a noteworthy development. Warrants careful thought about the overall health and direction of the market leaders.
Okay, now let's quickly look at the last 3. Microsoft, Amazon, and Meta. Well, maybe they haven't triggered the exact same level of explicit bearish signals in the mainstream news. It's important you note that all 3 are also trading below their 50-day and 200-day moving averages.
Correct. And that in itself is a kind of cautionary setup. It can sometimes come before further declines if the trend doesn't reverse pretty quickly.
So even without all the headlines, the prevailing momentum is down for them too.
Precisely. Even if the decline hasn't been quite as sharp or dramatic as some of the others yet.
Okay, let's get specific for these 3. Microsoft has now confirmed a death cross. 50-day crossing below the 200-day.
Yes, it has now confirmed that. And it's accompanied by a bearish MACD crossover too.
What's MACD again? Briefly.
Moving average convergence divergence. It basically indicates weakening short-term momentum when it crosses bearishly like that.
Got it. So Microsoft makes 5. 5 out of the 7 with death crosses now. Wow.
Yeah, the confirmation in Microsoft, especially given its reputation as, a relatively stable blue-chip tech stock, it adds further weight to the overall bearish technical picture for this whole group. The MACD crossover just reinforces it.
Okay, Amazon. Its RSI dipped into oversold for the first time since last August.
Right.
Plus, it broke below its intraday VWAP, that's volume-weighted average price, and a rising support trend line, fallen below its lower Bollinger Band. And its MACD also formed a bearish crossover.
Yes, quite a collection of signals there.
That really sounds like a confluence of indicators pointing to pretty significant short-term selling pressure on Amazon.
It does. The convergence of multiple short-term bearish signals like that oversold RSI, breaking support levels, breaking the Bollinger Band, the bearish MACD, it strongly suggests a notable increase in selling momentum and likely a period of weakness.
And finally, Meta. Its RSI is near oversold and even hit a significant oversold reading recently.
Yes, it dipped quite low.
Its MACD remains negative and the price is still trading below both its 50-day and 200-day moving averages.
Correct.
So that paints a picture of a pretty persistent downtrend for Meta, even if a death cross wasn't specifically mentioned in your sources yet.
Exactly. Meta's sustained downtrend, combined with the negative MACD and the RSI flirting with oversold, indicates ongoing selling pressure that definitely aligns with the broader weakness we're seeing in several of its Mag 7 peers.
And it's so crucial to remember, these individual stock moves aren't happening in a vacuum, are they?
Not at all.
Both the S&P 500 and the NASDAQ indexes have also recently flashed death cross signals, which just highlights how widespread this technical weakness is across a big chunk of the large cap market.
That broader market context is absolutely critical, yes. The death crosses in the major indexes suggest these signals within the Magnificent Seven are part of a much bigger trend affecting the overall large cap landscape.
So this isn't just a story about these 7 specific stocks.
Definitely not.
Okay, so overall, Wall Street analysts seem to be, preparing for more short-term volatility around earnings and other potential catalysts for the Mag 7.
It certainly seems that way, bracing for potential swings.
But their general outlook for the next month or two remains cautiously optimistic. Average price targets still suggest considerable upside for most of them.
That's the picture, yes. Which creates this fascinating divergence, doesn't it, between the quite concerning technical signals and the still relatively positive fundamental outlook from the analyst community.
Yeah, that contrast is really compelling, especially heading into earnings season.
It suggests analysts might be looking past the current weakness, focusing on longer-term growth, or maybe anticipating positive news that could turn the technicals around.
So, okay, summing up. You can see there's clearly a lot happening under the surface with these huge tech stocks.
Definitely.
We're seeing this confluence of bearish technical signals, oversold conditions, breaking key trend lines, and now these more concerning death cross formations in 5 of them: Tesla, Nvidia, Apple, Alphabet, and Microsoft.
And these technical patterns are unfolding against a backdrop of various fundamental factors: delivery numbers, export restrictions, maybe shifting consumer demand.
Yeah, and it's vital, as you say, to recognize that technical analysis and fundamental analysis offer different but hopefully complementary views.
Exactly. And this situation really highlights how you can get discrepancies between that short-term price action, shown in the technicals, and the longer-term growth expectations that often drive fundamental values and analyst ratings.
Right. Well, hopefully this deep dive has given everyone listening a clearer, maybe more structured understanding of the key technical and fundamental concerns swirling around the Magnificent Seven right now.
Helping cut through the headlines.
Yeah, helping cut through the noise and get a better sense of what might actually matter going forward.
And by understanding these key signals and the underlying drivers, hopefully you're better equipped to interpret what's happening and make more informed decisions.
So considering these pretty widespread bearish technical signals playing out alongside that still largely optimistic analyst sentiment, what do you, the listener, think is the most likely path forward for these market leaders? Is this just a temporary pullback, maybe creating buying opportunities down the road? Or are these cracks we're seeing the start of a more significant shift in market dynamics? Definitely something to mull over.